Hi. Today I have Jeff Lagoni with me from the Lagoni Mortgage Group. I've known Jeff for over 10 years and have a lot of respect for him. So I chose him today to speak to you about lending, loans, first-time home buyers, and especially with condominium townhomes. Also, of course, single-family homes. But Jeff is so well-rounded and knowledgeable in many areas that I thought I'd bring him to you today to give his opinion on what's going on in the mortgage world today.
Denise, thank you so much for having me. I appreciate everything you just said. And I have to tell you, condos have a special place in my heart. And recently, was it on YouTube that you did that recording?
Yes.
And as I'm watching.
That was Bethel Park TV.
That was Bethel Park TV?
Yes.
As I'm watching it, I think I even sent you a message halfway through the video. I didn't even get through it. And I'm like, oh my goodness, Denise, like this is amazing. All this information that you're giving about condos is really what real estate agents need to know, lenders need to know, and people need to know as they're buying a condo. So your knowledge, your education, and really your passion about condos is, I got to applaud you for that. Like I don't know many real estate agents, and I'm not knocking real estate agents.
No, of
and
course.
I'm not knocking lenders. I'm just saying, condos are a unique purchase. And you really need to work with somebody that knows condos and can help you navigate the process.
Thank you. I appreciate that. And same here. I've been in the condo industry for many years in many capacities as well. Not only do I own one, so I purchased one years ago when I was a single mom, and I have a place in my heart for that and for the person who is trying to purchase a home today. And it lends to, housing, whether it's single family home or condo, has a unique place for each person and each time in their life.
Right.
So I had a single family home and I have a condo now, and it sits with the times for my needs.
Right.
And that may change, just like things do. You buy and sell. I think that you know what the time frame is that people do change or sell homes and rebuy. And 7 years, is it still the same?
It's a little bit longer than that now,
Longer?
right? So after the pandemic, more people were fixing up their homes than they were just moving. It used to be every 4 to 7 years. Now it's like every 8 to 10.
Is
so
it?
After the pandemic, there were a lot of people that just stayed and renovated and made their home what they wanted it to be versus just going out and buying another home. Something you mentioned as well that's near and dear to my heart is right now, the average American income cannot afford the average purchase price. And so there's an urgency in my heart to get the word out that people need to buy a home if they can afford the payment. And the younger you are, the more time you have on your side to have that home appreciate over time, to have you pay down the principal. Because every time you make a principal and interest payment, that principal payment is like a forced savings account that you have. And then even when you file your taxes, you may be able to have depreciation, which helps you keep more of your own money and you start to build wealth. Unfortunately for me, nobody taught me this stuff in high school, and I didn't have anybody in my life to say, hey, you need to buy a house right now. Actually, a great friend of mine, I would say, put me into a home when I was 35 years old. And for me, I can't thank him enough for putting me into that house at that time. And at the time, it was just me and my son. And he said, man, you can't raise a kid in an apartment building. And then he put me into a home. And I still own that home today. And if you look at it, that was in 2007. I bought it for $145,000. Today, that home is worth $315,000.
Wow.
Right? I kept it as a rental property. The mortgage payment on it every month is $950. The rent that I receive is $2,000.
Wow.
I could actually get more rent, but the tenant is amazing. So he tells me when anything goes wrong, he fixes it. I just pay for the materials, right? So it's a great investment to own real estate if you can afford the payment.
Right.
And it has to be the right purchase for you.
So talk to the people about types of loans in purchasing for a first-time home buyer especially.
Sure. And you want to talk about condos or just homes in general?
Well, both really.
Okay. So for a condo, that's kind of so for me, I always thought a condo looked like an apartment building. But that's not the case. Architecturally, it doesn't matter what it looks like. It could look like a single family home. It could look like a duplex. It could look like single family living. What a condo is how it's associated. So there are two different types of associations you can have. There's what they call PUD, that's a PUD, that's a planned unit development. That's different than a condo. And so when you're going to buy one of these homes, you need to know how is that association organized, because they're treated completely differently.
Right. Townhomes as well.
In townhomes as well. Yep.
Right.
Yep.
Yeah. Okay. So a first-time home buyer today with the lending, and there's changes every day, and I know we're just talking about today,
Right.
because we can only go as far as
Right.
today. Tell people about the types of loans that you could get, and what's required with down payments, and
Sure. So for a first-time home buyer, if you don't have a lot of money saved, there's a program through the PHFA. It's called Pennsylvania Housing Financing Agency. They call it their KFIT program. That's FIT. It stands for Forgivable in 10 Years. And what they'll do is you can get financing, right? And that forgivable in 10 years is 5% of the purchase price. So if you bought a $200,000 home, they would give you $10,000. And it's forgiven 10% a year. So each year, $1,000 is forgiven. And at the end of 10 years, you owe no money, and there's no interest on that loan. So that money can be used for your closing cost and your down payment. So it really helps people get into homes with little to no money out of pocket. For the PHFA program, they have to have a minimum of $1,000 out of pocket.
can you walk through a little bit of the credit that is needed for a person to purchase?
Absolutely. And credit for me is near and dear to my heart, right? So I came from being a computer programmer before I got into lending, and my credit went from perfect to absolute garbage, right? Because I went from making $100,000 a year as a computer programmer, and I don't think I made more than $18,000 a year for a long time. So I don't know credit just because I studied it. I know credit because I lived it. And
That's me with condos.
so for me, it's near and dear. So when somebody calls us, I don't want anybody ever to be embarrassed to say, look, my credit's bad. I'm embarrassed to talk to you right now, because I'm pretty sure I don't think anybody would have a credit score lower than what I had. And when I was going through it, for me, I was like, man, if I ever get through this, I'm going to help people navigate how to get their credit better and how to get to a place where they can buy a home. So for us, we never say no. The answer is not right now, but here's your game plan and here's how we get there.
Right.
And so when it comes to credit, we got 1 of 3 ways that we can help you get there. The first way is we can look at your credit report. We can run an analyzer on it that says, hey, if you pay this off, your score can jump to a place where you qualify.
Great.
And as an example, I had somebody with a 521 credit score who had been denied by several lenders before calling me. I looked at his credit report. He had a 521. If he paid his $300 credit report off, his score could jump over 640.
Wow.
So he did it, we rescored it, he goes over 640, and he closes with an FHA loan. So being able to look at the credit report and say, hey man, how can I get my scores to a place where they qualify, is important that your lender can do that for you. The second thing we can do is what's called credit restoration. So there are companies out there that will look at your credit and be able to help you dispute derogatory things on your credit report. There are a lot of HUD agencies throughout the state that you can meet with. They'll take you from A to Z, and they'll go through your credit report with you. And the thing is, there's been studies done. The Massachusetts Interest Public Group did a study. Almost 80% of credit reports are inaccurate.
Wow.
So when you go through it, the way the Fair Credit Reporting Act law was written in the 70s is that you have the right to dispute every derogatory thing on your credit report.
Right.
And then the onus is on the creditor to prove that it's
Right.
accurate. So those agencies will help you dispute the inaccuracies on your credit report to help you improve your credit score. We've had some scores jump tremendously because of the inaccuracies. The study also showed that 25% of credit reports are so inaccurate that people are denied credit because of the inaccuracies. So what you want to do is make sure you're monitoring your credit, make sure everything's accurate and it's up to date.
That's really important. And what's most important for a person to understand is to do all of that in advance before they even start looking for a home. I've seen that in many cases where someone's looking for a home and then they are behind the 8 ball. So they can't put an offer in because they don't know their credit. They don't even know what they can afford. So that's really important.
Yeah. So for us, our biggest nightmare is when somebody calls us on Saturday night and goes, hey, I just signed a sales agreement. Can you get my mortgage for me? Where we clap our hands and stomp our feet is when somebody says, hey, I'm not looking at buying for up to 3 months to 3 years. That gives us a chance to get all their documents in and review them to make sure that everything's right. It's not intuitive when you get a mortgage. For example, like a bank statement. Cash in lending is a bad word. So if we pull up your bank statements and we see a cash deposit, we're going to ask you to verify, where did that money come from?
Right.
And for us, 100% of our customers say, hey, don't worry about it. I don't have any cash deposits. About 40% of the time, there's a cash deposit. And you're like, hey, what is this? And you're like, well, my sister paid me back from vacation, or you know what, I had a claim from an insurance check. So we have to hop through those hoops to verify. If we get those statements up front, we can make sure that your bank statements are accurate the way they're supposed to be. The other thing is credit reports, right? It gives us a chance to look at your credit report, get it cleaned up. Your tax returns, your pay stubs. Most people are, here's the biggest thing. Most people, what they think they make is not really what their mortgage qualifying income is.
Right.
So once they submit their W-2s, their tax returns, their pay stubs, then we look at those documents and we calculate what's called your mortgage qualifying income. So for example, a buddy of mine said, hey Jeff, I make $60,000 a year. And I said, you know, I know you make that as a salary. However, that's not what your mortgage qualifying income is. We went back and forth. He's one of my best friends that I ever grew up with. He gets his documentation in, and it was really $38,000 a year was his mortgage qualifying income. That has a huge impact on what you qualify for, especially if you're self-employed, especially if you have 1099 income. So we want to make sure that we get those documents in up front. We get everything cleared so that you can enjoy the process of buying your new home. It should be an exciting process that you enjoy. Where it's a nightmare is that I have to call you a week before closing and go, hey, guess what? We found this in your documents, and now you can't close on time, or you can't close at all. And what most people don't understand is when you give us your documentation, it could be as little as 30 pages, it could be as much as 500 pages. And we have to go through every line with a fine-tooth comb to make sure that everything's on point. So to your point, if somebody says, hey, I'm not looking at buying for 3 months to 6 months or longer, we love that. Because we can get you in, and then you're going to get the best rate. You're going to be in the best loan program, and then you're going to have fun shopping for your home, knowing that you're going to close on time.
Right. Thank you for that. So, is there anything in particular you want to tell the people about FHA financing with condominiums and warrantable, non-warrantable things of that?
Yeah.
I know.
So as soon as somebody says they're looking at a condo, the first thing we want to do is we want to get in touch with the real estate agent and ask them, is this really a condo? And then we want to do our homework. What we want to do is we want to get a condo questionnaire completed. That'll give us some insight as to what type of financing we can do for that condo. Warrantability, right? So for us as an independent mortgage banker, we have to have a warrantable condo, right? And if it's warrantable, then we got to meet Fannie and Freddie guidelines, which we can do. We just have to do our homework up front.
Okay.
And you can do financing with as little as 3% down, right? We can do the first-time homebuyer program where they get 5% of the purchase price towards their closing cost and their down payment. We can do all those programs, but we just need to make sure that we have all the information up front so that we know that we can do that financing. Now, there are local banks that will do financing as well, and you just have to meet with that local banker to see what are their terms right now. Because banks, the way they operate is based off their portfolio. So sometimes they're like, hey, we have too many condos, we don't really want them right now. There are other banks that like, absolutely, we want condos right now, and they may have a special running for first-time home buyers that may be a better opportunity for you as well. The main thing is to get with a real estate agent. And Denise, I'm not saying it because you're sitting here, I'm saying it because it's true. You know condos, right? So if somebody wants to do condo living because that fits their lifestyle, they really need to get with a real estate agent and a lender that knows what condo financing looks like and make sure that they take care of those things up front. For me, when I first got into this business in 2001, the very first loan I ever did was a condo. Right? I had no idea what I was doing.
What an experience.
Yeah, so it was, I would say, a family member, right?
Yeah.
And she had perfect credit. She had money in the bank. And it was my very first loan. And it's a week before closing. And the bank says to me, hey, where's the condo questionnaire? And I go, I don't even know what you're talking about. Like,
God.
what's a condo?
Yeah.
I didn't even know what a condo was.
Right.
Here, come to find out, it was a brand new project. So it wasn't warrantable. The first phase wasn't even done.
Right.
And so there was zero chance of me being able to do that loan for her.
Wow.
So she had to switch gears. She did go to a local bank. They gave her money, but she went from putting 5% down to 20% down.
Right.
And it was a nightmare for me.
Right.
I don't ever want anybody to go through that process again. And I certainly don't want to give bad news. I'm getting too old for this stuff. I got too many gray hairs. I'm trying to hold on to the hair that I have right now. And the last thing I want to do is give bad information or bad news at the
That's
last
why
second.
we're here.
So we want to do.
I mean, we're here for you,
Yep.
for the general public to understand financing, condominiums, single-family homes. It's not for everyone. A single-family home's not for everyone, as well as a condo not for everyone. So what we want you to be aware of is what you qualify for, what is the price, what is the type of home, is it warrantable, non-warrantable, single-family, condo, townhome. There's different types of housing and different types of loan for everything. And your credit is important as well. So that's what we want you to know. I thank you so much for all of this
and
information.
the thing is, as a customer, if you want to live in a condo, you don't need to know these things. So you don't need to be an underwriter. You don't need to be a real estate agent. You don't need to be a lender. The main thing is to hire people and make sure you ask the right questions. Like ask the lender, ask the agent, are you familiar with condos? Have you done condos in the past? And be aware of, just like any profession, right? There are good and bad in every profession. And my question to you is like, what do you enjoy? I know you own a condo, but what do you enjoy about condo living? Like, what's the benefits for you of owning a condo?
Well, that last show that I did, I think I mentioned some of the things, but it was easy for me. I was working. I was single. I was a single mom. I worked 50, 60 hours a week. I didn't want to have to take care of anything. And as I mentioned before, even though you pay the condo fee, it still is reasonable for me to be in that environment. And even as the expense was, because I changed my whole financial situation from when I got divorced as well. And it wasn't pretty.
Right.
So I had experiences that I had to go through. So I did review, should I live in a home? What's the time frame that it's going to take for me with a 60-hour work week to take care of a child, to give my child attention, to give the house attention? I didn't have that. And then I found that to be just as economical to purchase what I purchased and have all the amenities. So I had the pool, I had the clubhouse, I had, my child, everything. It was just
and they cut your
perfect
grass,
for me.
right? So like that's the other thing you have to think about. Like when you own a home, you have to buy a lawnmower, you got to buy gas, you got to spend time cutting the grass or pay somebody to cut the grass. Like
the utilities too. The utilities in my condo are reasonable, very reasonable compared to a single family home.
Right.
So that helped me too, and I urge people to look at that side of housing and condominium townhomes. Ask what the utilities are monthly, because you look at the taxes, but people really don't tend to look at the utilities. I mean, if you are in a single family home, you want to make sure that the home that you're purchasing is insulated properly, the windows, everything to take on the cost per month for those utilities. I mean, that's another important factor. So there's good and bad in everything. Jeff, if I had a crystal ball to answer what's good for you, it's just that you and I, because we're honest and we like to be honest with people on a case-by-case basis.
Right.
What is it that you need? Where do you want to be? Let's see what that cost is. But if you know your cost going in and you can afford that, then that's where we help.
So anybody thinking about buying a house, like one of the first steps for them could be sitting down with you and reviewing like the types of homes that they can own. They can own a condo, they can own a single family home, they could buy a duplex or a triplex.
Right.
And then you can walk through this budget with them to say, okay, does this fit your lifestyle? Does this fit what you're looking for your family or for yourself? Like these are things that they can talk to you about up front.
Right.
Because they may not know it, right?
Right. Just like the credit score with financing.
Right.
Same thing.
To your point about telling the truth, right? I was sharing a story with you earlier. There was a friend of the family that called, was buying an investment property, and after we walked through, his finances and his situation, I told him, I'm like, you're better served calling a local bank the rate's going to be about the same, and they're going to put you through less hoops than I'm going to. And at the time, I had somebody on the call that I was training. And when we hung up the phone, he goes, boy, if I said that at my previous employer, I'd be fired. And I said, well, what we do here is we tell the truth. And the guy on the end of the phone goes, Jeff, this is why me and my family will always call you first, because we know you're going to tell us the truth.
Right.
Right? It's not about making a buck. It's just about,
Right.
because where my heart is, like my heart, I just want to help people.
Right.
Right? Make the right decisions for themselves, be the expert in this field, and make sure that they're doing what's right by themselves and their family.
I know you have,
Yeah.
Jeff. And I know a lot of lenders, and I deal with a lot of lenders, not just you. But I had you come today because I knew that this is a critical issue today in financing and condominium, which is why we're here, to understanding multifamily living and what you need to know today. So I really appreciate you being here today and being honest with us.
That's good stuff.
And yeah, it is.
Thank you.
Yeah, you're welcome. So Jeff, how do you determine the right loan for a customer? I know we talked about conventional FHA, there's VA and other loans too.
So on our team, we always ask the customer, we start off with, hey, have you saved money that you want to use for a down payment, or are you looking to put more money down? And we really dig into their finances. And if they say, hey, we want to try to finance as much as possible, then we'll ask them, like, are you a VA? Are you a veteran? Because with the VA loan, you don't have to have a down payment. And you don't have monthly mortgage insurance. And it may be the best fit for them. If they say that, we may say, where are you looking to buy? What's your household income look like for everybody that's going to live in a home? Because the USDA also has a program that doesn't require a down payment.
That's great.
You just have to be in an eligible area. And we have a
Right.
map that we can give to our customers where they can look and say, hey, I'm actually looking in that area, and it's eligible for that type of financing. Or FHA, right? With FHA, you only have to put 3.5% down compared to the purchase price. And then, of course, there's conventional types of financing. The other thing we do is reverse mortgages. So reverse mortgages in recent years have been used to purchase a home. And so for the seniors, it allows them to buy a house and then not have a monthly payment. So
that's
those are
great.
options as well, depending on the customer's situation.
Yeah, I'm familiar with that. I was impressed when I first heard about reverse mortgages. They could do well for some people who have that need. Yeah.
And that's the thing. You have to look at somebody's situation and
Right.
does it fit for them? Personally, if I could put my mother on a reverse mortgage, I absolutely would, because that would be a huge win for her. I always said to my 4 siblings, I'm like, why should she leave the house to the 5 derelicts that put her in that spot in the first place, right? Like, just let her enjoy her life, right? So if I
don't
could
think
put her,
that's the case.
yeah, so if we could put her on a reverse mortgage, I would, because it would be the right move for her. But it has to be the right move for the family. So you sit down with the whole family and make sure that a reverse mortgage is the right option for them as well.
That makes me think of something else. In condominium living too, we see a lot of people purchasing for their parents, or parents purchasing for their child.
Right.
So we have that a lot too.
Yeah.
And that's an option, because the parents have an investment and the child's paying for the monthly payment, and they
Right.
both win. So we've had that.
And the best conversations that we have is if they have a financial planner or they have
Yeah.
an attorney that's representing the family, we'll call them in as well.
Right.
So that it's a comprehensive plan that fits perfectly for what the parent's trying to achieve or the kids are trying to achieve. So it hits their financial goals. Like, we don't sit there and just talk straight mortgage. We're not financial planners.
Right.
We're not
We're not.
CPAs.
Nope.
But we'll call their experts in and
Yeah.
have them give the advice that's the right loan program for them.
Right.
Oftentimes people are like, hey, I just need the lowest rate. When we hear somebody go, what's your lowest rate? What we really hear them saying is, are you going to put me in the right loan program? Because there were times in this market that we knew rates would drop. Now, nobody has a crystal ball, but there was a time where getting the lowest rate, or you paying points to get a lower rate, would not be the best option. You should have taken the highest rate, where you could get a rebate and have your closing costs covered, and then later when rates dropped, refinance, and that would have been your best option. Even right now, a lot of people, like, if you watch the mainstream media, if you watch news, you'll never buy a house, right? Because it's always negative. And you see on the news right now, I had somebody call me that said, I said, man, weren't you pre-approved? And he goes, well, Jeff, I'm going to wait this out. Right now, purchase prices are up, rates are up, and I'm just going to wait it out. And I said, man, what I'm about to tell you doesn't benefit me, because he was renting from me. And he pays his rent on time at 6 a.m. the
Oh
first
my
of every
God.
month. And I'm
Yeah.
like, You leaving as a tenant breaks my heart, but I have to tell you what's going on. 5 minutes later, he's like, man, I need to get pre-approved. Because right now, you could get a great purchase price because everybody's sitting on the sidelines. But Denise, as soon as rates dip a little bit, what happens? Everybody's going to try to jump in the pool, and it's going to cause demand to go up. So when you get that better rate, the purchase price is going to be higher, so your payment's going to be higher. So if you hopped in now with rates, slightly higher than where they used to be, you get the great purchase price. And then you refinance later and your payment's here versus waiting till the purchase prices go up with the lower rate, you're going to have a higher payment. So depending on your situation, like a lot of people right now feel trapped because they're like, hey, I have a low rate and I don't want to give up this low interest rate. But depending on their situation, they might want to get into a new school district. They might have outgrown their house.
Right.
But they may be able to keep their current house and rent it out, keep that great rate, and have the rent that they're getting off that property offset them moving up to the house that they really need for their family right now. And then when rates drop, they can refinance and have that great payment too. So these are all conversations that we have with their CPAs, with their financial planners and their families to
Right.
make sure that they're getting the right loan program for their situation.
Well, I'm glad you put that customer first.
Yeah.
That's why
Yeah.
I love you, Jeff. So thank you. And this is Jeff Lagoni with the Mortgage Group. Take a look at his Instagram. You're on Instagram and
Right.
Facebook. I know you do a lot
Yeah.
of that. I see them. They're really educational.
I would encourage you to follow us on whatever platform you prefer, whether it's Instagram, Facebook, YouTube, TikTok, LinkedIn. It's the Lagoni Mortgage Group. Our hearts are that we want to educate on the stuff that we didn't learn in school. And through that, we want you to be able to make the right decision for you and your family and also help you start to build wealth.
Thank you. See you next time.